We also have some new data on inflation this morning. Prices rising slightly, up 0.3% in February, and ticking up 2.4% compared to the same time last year. Let's talk about gas. That is creeping up again as well. The national average at $3.58 a gallon today. NewsNation's Alicia Nieves is monitoring all of this on Wall Street for us. Good morning to you, Alicia. What does this latest report indicate for the U.S. economy as a whole at this point in the conflict?
Yeah, the data out this morning kind of paints this picture that's a little bit hard to digest, so let me try to break it down for you. 2.4 headline inflation number. That's actually a pretty solid number year over year. Same what we saw, the previous month. And if you look at this time last year, it is a lower rate, even though, inflation's still ticking up a little bit higher here. Now, typically that would be obviously great news for the economy. We would see markets go up higher. But the reality is, given what is happening in Iran, the impact to oil prices and what consumers are paying at the pump, that is still weighing mostly on markets that, 20-something minutes from now are looking to open again to the downside here. In this report, one area of concern is the energy sector. That actually showed, and this is ahead of the conflict with Iran, that energy was already taking up around 0.6%. You can imagine how much higher that report is going to show for next month when it does factor in what you're seeing right now. The prices at the pump, what we've seen with WTI and crude prices. Gas prices up in the last 2 weeks around 60 cents on a national average with the ongoing crisis and conflict in Iran. Iran effectively, as you and Connor were talking about a moment ago, shutting down the Strait of Hormuz. That has also led to diesel prices up being, double what we're seeing at the pump here, up around $1 for the same time period. And that is critical to keeping goods moving through the economy and really could, in the days and weeks to come, ripple effect into, prices beyond the pump, and everyday goods are starting to go up higher. There is some good news out this morning that could alleviate some of this pressure today on oil prices. We're just getting news that Germany and Austria are announcing they are going to start releasing about 400 million barrels of oil from their reserve. They are now the third nation to do so, following Japan. We're also hearing the International Energy Agency is reportedly proposing its largest ever reserve release to counter these soaring prices after G7 nations earlier this week decided not to release oil from their reserve. All of this potentially could have a positive impact on oil prices. Oil futures right there, they're trading right around $87 a barrel, but they were up some 30%, closer to $110 a barrel earlier this week. Now, those, of course, move ahead of prices at the pump. And there's a saying to kind of give context here on when we could see relief at the pump. Prices go up like a rocket, but they fall like a feather. So while we are expecting that potentially we see prices come down for the everyday consumer, it's going to take a while for it to trickle down, especially as we're still getting ongoing reports of tankers in the Strait of Hormuz still struggling to get through. Marni.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.